You know, there's a war being fought every single day that you probably don't see. It's not fought with armies or missiles. It's fought with money.
In this weapon, it's incredibly powerful. I mean, it can isolate entire nations, freeze the assets of individuals, and bring whole industries to a grinding halt. They're called financial sanctions. And in this explainer, we're going to pull back the curtain and show you how they really work and how they are quietly shaping our world.
All right, first up, a weapon made of money. Let's start with the absolute fundamentals. What is this thing?
It's a term we hear thrown around on the news all the time, right? But what does it actually mean?
Well, at their core, financial sanctions are kind of a middle ground. Think of them as more forceful than an angry diplomatic letter, but obviously less severe than military action. Governments use them to pressure or punish countries or groups for things that threaten peace and security.
And they really come in two main flavors. First, you've got comprehensive sanctions. This is the sledgehammer approach, a total economic embargo against a whole country. But because that can really hurt ordinary civilians, we're seeing a big shift towards targeted or smart sanctions. These are much more like a surgical scalpel, aiming only at specific people, companies, or industries to minimize the collateral damage.
So who gets to decide when and where to use these financial weapons? Let's take a look at the key players who are setting the rules of this economic battlefield.
You've basically got three main bodies in charge. There's the United Nations Security Council, which imposes sanctions that are legally binding for all member states. Then you have the European Union, which has to make its decisions unanimously. And then there's the United States, acting through its Office of Foreign Assets Control, or OFAC. Now, because the US dollar is so central to everything in global finance, OFAC sanctions have this incredible extraterritorial reach, which means they can hit non-US companies too.
But here's the thing. Governments don't enforce these rules all by themselves. They basically deputize an entire industry to act as the gatekeepers of the whole system. The banks.
Banks are right there on the front line, and they have a legal duty to enforce sanctions. It's like a multi-layered defense system. It starts with Know Your Customer, or KYC, which is just about verifying who people are. Then comes screening, checking customers in every transaction against all the official sanctions lists. They also use transaction monitoring to spot any suspicious patterns. And finally, if they find anything, they have to report it to the authorities.
And the stakes for getting this wrong? They are incredibly high. If a bank fails to comply, it can lead to massive fines. We're talking billions of dollars, and even criminal charges. So yeah, that's why they invest so much in their compliance programs.
All of this enforcement creates an inevitable conflict. It's a constant, high-stakes game of cat and mouse between the people enforcing the rules and the people trying to break them.
On the defensive side, you have the bank compliance teams who are trained to be financial detectives. They're looking for red flags, the little signs of evasion. For example, are they using super complex company structures to hide who's really in charge? Is money moving through high-risk countries? These are the kinds of patterns that set off all the alarms.
And on the offensive side, well, sanctioned groups get really sophisticated. They create these tangled webs of anonymous shell companies. They use state-sponsored cyber theft to steal from banks, and they even do things like transfer oil from one ship to another out in the middle of the ocean to hide where it's all coming from and going to.
The sanctions program against Iran is a perfect real-world example of this constant battle. It's been going on since 1979 and has been tightening and loosening with every geopolitical shift, like the 2015 nuclear deal, that's the JCPOA, and then the U.S. withdrawal in 2018, which just kicked off a whole new round of this evasion game.
This ongoing conflict is forcing sanctions to constantly evolve. So what does the future of this economic warfare even look like? Well, the new battlefield is all about technology.
There are two huge forces that are defining the next chapter of this story: the rise of digital currencies and, of course, the constant need for better cybersecurity.
Digital assets like crypto pose a fundamental challenge. Why? Because they can operate completely outside the traditional banking system that sanctions rely on. This creates brand new ways for sanctioned actors to move money around anonymously. And at the exact same time, the threat of cyber attacks means the very systems banks use to enforce sanctions are now becoming targets themselves.
So, what does this all mean? It means we're walking into an era where value can be sent instantly across the globe as just lines of code. And that leaves us with a critical question for the future of global security. When money becomes code, can sanctions possibly keep up?